It's a holiday shortened Thanksgiving trading week that's coming up on 3 Minutes on Markets and Money. It's Thanksgiving trading week, which means the inmates are running the asylum, so expect a little bit of volatility as volume will be light heading into the holiday season. Of course, as the markets last week rallied, the good news is that the markets bounced right off of the 100-day moving average last week. Of course, breaking above that was the first test of that break above resistance. We came back down on that, tested that on Thursday, bounced nicely off of that support, turning that previous resistance into support. Nice little follow-through rally on Friday. Again, markets continuing just to kind of consolidate along this little bit of an island top here. So watch this trading carefully. The 200-day moving average just above markets where they are right now. Markets look to open a little bit weak this morning. Again, not surprising kind of after what we saw last week as well. As we start to wrap up this trading year, investors are starting to get a little bit more concerned about positioning. Markets have had a very nice rally from these lows, kind of just running along that 20-day moving average. And that, by the way, is also kind of supportive for the markets. The 20 days now crossed above the 50-day moving average. The 20 days are approaching across above the 100-day moving average. Again, that's just providing some more support for the markets here near term. So as we start to get into the month of December, the one thing that we've been talking about here is expect a little bit of weakness following the holidays, mutual funds making distributions for year end. Then you get your traditional Santa Claus rally. Then we'll be talking about what happens as we get into next year. But right now, as we really kind of just take a look at the markets in terms of positioning, there's really nothing to be too concerned about. The uptrend of the market still very clear here. We rallied right to the top of this uptrend, came down, tested support, again, validating that support. Markets holding in here nicely, but I would be using this rally to consistently take profits and reduce risk, at least at this point, until we get into next year. A lot of these rate hikes from the Fed have not come into the economy yet. Earnings are still too high. Those have to come down. So there's still some risk to the markets here, at least near term. There's a lot of hope right now that this bottom of the market is the bottom, and there's certainly a case for that, considering that we've been holding these bottoms in the markets going all the way back to the June lows. We can make that case that this is the bottom. Again, I'd be more comfortable in making that statement if we had the Fed reversing interest rates here, if the Fed was stopping hiking rates, if we saw earnings starting to bottom and turn higher. We don't have that catalyst just yet in the market. So again, be a bit cautious here until we start getting some better underlying technical support for a sustained bullish rally. That'll probably happen sometime next year, and we'll be talking about the two best trades coming up for next year in an upcoming report right here on 3 Minutes of Markets and Money. We'll see you next time. So expect this week to be a little bit volatile, a little bit sassy, and just a little bit... I can't do it with a straight face.